Let's get a move on and focus in from one corporate voice to another then and talk a little bit about the outlook with the management of Sandhar Technologies. We've got Jayant Dawar, he's the co-chairman and managing director, joining in to discuss their order book, localization and the benefit of the ramp up of Kia Motors and what that would mean for the company. Good to have you on board. Let's get an overall view first up as to what the outlook has been on domestic demand, the supply side scenario. We have seen the regulations for the lockdown easing. Auto sector has been, saying on board that they are seeing signs of recovery. They're going back to 70 to 90% of their pre-COVID levels. Just catch us up as to what the picture looks like for you.
Thank you for this opportunity. Very quickly, I think if you'd spoken when we spoke, I think in the month of April, it was all doomsday. And we've been very, very pleasantly surprised with the order book as it stands today. These are obviously on account of several reasons, and yet in some ways it is still a mixed bag. Some sectors of the automotive industry still continue to be in pain, especially if you look at the heavy commercial vehicle segment, except small levels of tippers or oil tankers, which have started to do a little better. The haulage portion, which is trucks largely, are still quite depressed in terms of sales. So that's the heavy commercial segment. Tractors, of course, are doing extremely well. I would not go into reasons. I think they seem to be well known that the agricultural output is much better, and therefore rural demand is better, and people seem quite hunky-dory on the fact that agriculture will continue to have great potential. The rains have been good and so on and so forth. If you come to passenger vehicles, two elements to this. One, of course, the four-wheelers, where again, one is seeing that the smaller value cars are doing extremely well. Not the expensive ones, not the luxury ones, but the smaller ones. I understand that the smaller models of both Maruti, whether it's the Alto or whether it's Hyundai small models, are doing extremely, extremely well. Similarly, in motorcycles or scooters for that matter, the ones that cater to rural demand, especially if you look at companies like Hero or even TVS for that matter, seem to be doing extremely, extremely well at this point of time. There is a huge push or pull from the market for these particular vehicles. The urban demand is gradually picking up, not at the level of what the rural one is at this point of time. And I do anticipate and feel that that is likely to go up as well, especially with people's preference for personal transport being the order of the day at this point of time. There could be several reasons. One, of course, there are debates as to whether it is sales or whether it is coverage of inventory, both of which are true in some respect. The inventory levels, especially in the case of two-wheelers, at one point of time, at all-time highs, were over 60 days with dealerships. And from what we understand now, it's for less than a week. And therefore, there is one thing about the sales in the market, there's another thing about people like us who supply. So for those inventory lines and the pipelines to get filled.
Sure.
Yes. You want me to stop?
Right. Right, Mr. Dawar, I want to understand more topics as well and, try and squeeze in as many questions since we have you with us. So let's talk about the partnership with Kia as well, how you're looking to scale that up. Do you think most other joint ventures as well can be operational over the next 18 to 24 months?
We've had 4 joint ventures that were supposed to go into production in this particular year. We had 2 that rolled off in the month of March. We had another 2 that were supposed to go online in April. They got delayed and they've gone online now. Kia and the Hyundai group per se has a huge push towards localization. And therefore, companies like us who had taken that initiative of localizing and bringing in those components to India are definitely benefiting as of now. We have started production, we've started deliveries, and these are likely to go up in terms of volumes as we see through the balance of the year.
current auto sector has now completed about a 6 to 8 quarter down cycle. Would you say that we're near the bottom? And if, all right. Saying that the current down cycle, would you say we're close to the bottom? And in terms of growth going forward as well, given the higher content per vehicle, how would you quantify the opportunity for growth?
Well, it's been said often enough that, another 5 years or so, 40% of the value of the vehicle is going to be electronics, for example. And therefore, this is all coming from new parts, which has given opportunities for new component players to come in and for the existing ones to be able to add to the wallet share with each customer. We do believe that margins here in these businesses are likely to be more than the legacy businesses of commodities. And therefore, one is extremely bullish that this is the way forward. If it's happening around the world, we really don't have a time lag between what happens in Europe or in Japan and in India any longer. So for that matter, I think the huge value push is there to stay in India as we go forward.
About electrical components as well. They constitute about 25% of total vehicle cost at the moment, and costs are only expected to go up in the next decade when we switch to greener vehicles. To what extent do you feel domestic manufacturing can really help with that?
Well, I think if you ask me, most of we manufacture some electric vehicle parts, if you're referring to those. I think that's that's getting to be on the back foot right now. People have started to realize that, the new ICE engines or IC engines are now much more pollution-free in some respect, especially with Euro 6 norms coming in. Development is taking a back seat literally because people are going back into manufacturing and not so much into R&D at this point of time. However, the electric business or the alternate powertrain business is here to stay. People still have to focus on whether it's going to be just electric vehicles or hydrogen vehicles or hybrids and so on and so forth. We'll have to wait and see. I think COVID has pushed back that initiative a little bit. We do hope that it will come back sooner than later. At this point of time, the output on the electrical vehicles and its output is kind of limited in India.
Sure. Help us understand, Jayant, what exactly is your order book status? What's the current order book like? And what are the key opportunities that you foresee within the domestic as well as the export markets?
Well, like I said, initially at the beginning of this financial year, with all the apprehensions in mind, we were prepared to go down 30-40% in terms of overall revenues. Of course, April was zero sales. May came up at about 10-15%. June was at 50%. July, we almost went up to 90%. August has been more than 100%. We expect September and October to be even higher than those numbers of the previous year. So we do believe, while it's very difficult to forecast right now, especially with this looming threat of whether there could be second and third waves of COVID, but if that was not the case, then instead of the 30-40% drops that we had feared at the beginning of the year, we do believe that a large part of that coverage of the initial loss would be covered in the balance part of the year. And if that be so, most auto industry would end up, or component industry, especially the ones who are in the business or dealing or supplying to two-wheeler and passenger vehicles or tractors, could end up at probably at levels of 10% lower than what was there in the last year. So I think the balance.
Great to have you on the show, and thanks for taking the time out. And yeah, please go ahead. Finish your point.
No, I was just saying that it is much better than what one would have thought would be the case. There's, of course, the question of profitability. And because the first quarter of the year led to losses, and those losses will need to be recovered in the next quarter or so, which means you go back to zero levels in 6 or 7 months. In terms of profitability, of course, the period of profit is likely going to be just 4 or 5 months of the year. So to that end, the industry will suffer. But we do believe the margins could be much better on account of the fact that a lot of people have reined in their costs to much higher levels than they were previously. So I think to that end, it's been a trigger for introspection and betterment for the future. So I'm just going to leave it at that. My limited point.
Sure. Good to have you on the show and speak so candidly about what's really going on with the industry as well as Sandhar as well in particular. Thanks. As always, we let you go on that note. We're going to take a very quick break with news that we're down about 0.5%, haven't worsened much since there, but let's see whether another wave of selling kicks in the latter part of today's trading session, as was the case on Friday. The breadth, of course, has been weak from the word go.